After the absolutely wild, record-shattering year gold had in 2025, it's now standing at a crossroads. So the big question is, can it keep that momentum going? Or is a major pullback just around the corner? Let's dive into what the World Gold Council's outlook says might be next for 2026.
I mean, first, you just got to take a second and appreciate the year we just saw. By the end of November 2025, gold had delivered a staggering return of over 60%. That's a performance that made everyone in the financial world sit up and take notice.
And this wasn't just some flash in the pan. We're talking about relentless momentum. Gold smashed through and set more than 50 new all-time highs throughout the year. It just kept on climbing. And to put that into perspective, gold didn't just do well on its own, it pretty much dominated the field. It left most other major asset classes, like stocks in the US and in emerging markets, completely in the dust, taking a clear top spot on the performance podium. All right, so here's our game plan. We're going to quickly unpack that incredible 2025 run, then figure out what was driving it. And then we'll pivot to 2026, looking at 4 possible economic scenarios, a couple of wildcards, and finally land on the one key takeaway you need to know. So what was the rocket fuel behind this historic rally? What were the forces that all came together to create such a massive move? Let's get into the mechanics of it. What made 2025 so special is that, unlike a lot of other rallies that have just one main driver, this surge was powered by this really unique, balanced mix of things. You had geopolitical risk, lower opportunity cost, pure momentum, and even economic growth all chipping in almost equally. Now, let's just quickly break down that term opportunity cost, because it's super important here. It's basically what you miss out on by not investing in something else. See, gold doesn't pay you interest, so when interest rates are high, bonds look way more attractive. But in 2025, with a weaker dollar and lower rates, investors weren't giving up as much to hold gold, and that made it a much easier choice. Okay, so we've looked back at that phenomenal performance in 2025. That part's certain, it happened. Now, we've got to pivot to the much, much trickier question. What's next? The source material uses this image, and I think it is the perfect metaphor for where we're at. The economic outlook for 2026 feels just like this. We're trekking into this totally unknown landscape where uncertainty is the main thing you can see, and the path forward is anything but clear. And listen, this isn't just a vibe or a gut feeling. The actual market data backs this up. We're seeing more and more of what are called tail risk events. Those huge out-of-nowhere shocks like a pandemic or a major bank suddenly collapsing. Basically, big surprises are kind of becoming the new norm. So to help us navigate all this uncertainty, the report lays out 4 totally distinct paths the global economy could take. Now, the point here isn't to guess which one is going to be right, but to understand the whole range of possibilities and see how gold might react in each one. First up, we've got the baseline, the macro consensus. You can think of this as the business as usual scenario. The global economy just kind of keeps chugging along with stable, predictable growth. No major shocks, no big surprises. And if this scenario plays out, the outlook for gold is, well, pretty flat. Its performance would probably be stuck in a range somewhere between a 5% loss and a 5% gain. Pretty unexciting. Scenario number 2 is what they're calling a shallow slip. So here, the economy slows down a bit. That slowdown makes central banks start cutting interest rates again, and nervous investors start moving their cash into safer, more defensive things like, you guessed it, gold. In this kind of environment, gold would actually do pretty well. A shallow slip could see it climb somewhere between 5 and 15%. That would be a really solid follow-up to its incredible 2025. All right, now for the most severe one, the doom loop. This is a deep, synchronized global recession. We're talking rising geopolitical risk, confidence just collapsing, and the whole thing feeding on itself in a negative cycle. And this is where gold's safe haven reputation would really kick in. In a full-blown flight to safety situation like a doom loop, the report suggests gold could surge anywhere from 15 to 30% as investors just scramble to find a safe place to park their money. But what if everything goes the complete opposite way? Well, that's scenario 4, the reflation return. In this world, the economy just roars back to life, with growth coming in way stronger than anyone expected. That forces central banks to raise interest rates, which makes riskier assets like stocks look way more appealing. And yeah, this is the most bearish scenario for gold by far. With those higher interest rates increasing its opportunity cost and investors chasing big returns in the stock market, gold could see a pretty significant pullback, falling anywhere from 5 to 20%. Okay, so beyond those four big scenarios, the report also flags two major wildcards. These are factors that are kind of sitting outside the main models, but could totally shake things up and have a massive impact on the market. So the first wildcard is central bank buying. Emerging markets have been buying gold like crazy, but they still hold way less of it as a percentage of their reserves compared to developed nations. That suggests their buying spree could just keep on going, which would put a really strong floor under the price. But on the other side of the coin, you have this risk of recycling supply from India. See, over 200 tons of gold are being used as collateral for loans there. If India's economy slows down, people could be forced to sell that gold to pay back their loans, and that would flood the market with supply, pushing the price down. So, after going through all these different potential futures, from a doom loop to an economic boom, what is the one single thing you should take away from all of this? And here is the most important point. This isn't about trying to predict which scenario is going to happen. It's about strategy. The very fact that there are so many plausible yet wildly different potential outcomes is the entire argument for why gold has a role in a portfolio. Its main job is to be a diversifier, a source of stability against this exact kind of radical uncertainty. And that really leaves us with one final thought to chew on. As we've seen, these huge, unpredictable shocks are happening more often. So, in a world where surprises are becoming the new normal, you have to ask yourself, what is the true value of stability?